You earn $3,000 a month, but somehow only $2,100 appears in your account. Where did the rest go? We see our earnings disappear before we even touch them, and then watch them vanish again through bills and expenses. It turns out your paycheck is more like a complex ecosystem, a financial organism with multiple organs and systems, each extracting what they need to survive. What exactly happens to your money? How does the system shape your financial reality? And should you just accept this mysterious disappearing act? Your gross income, that beautiful number at the top of your offer letter, exists only briefly before it's carved up by forces far older than you. This number represents the total value your employer believes your labor provides. For every dollar your employer pays you, they're actually spending about $1.30. This hidden 30% goes to payroll taxes, benefits administration, insurance, retirement contributions, and office space. This isn't altruism, it's the cost of doing business. These additional costs are carefully calculated against the value you generate. And no, you can't just ask for this 30% instead. Now your paycheck begins its journey. First stop is federal income tax, which takes a progressive bite. The first dollars you earn are barely taxed at all, but as your income rises, each additional dollar gets taxed at higher and higher rates. Your 20,000th dollar is taxed much more heavily than your 2,000th dollar. This isn't random, it's a deliberate structure based on the economic principle of marginal utility. Your 100th dollar matters much more to your survival than your 100,000th, but this is just the beginning of the government's claim. Social Security takes 6.2% to fund retirement for current seniors, not for your future self, despite what you've been told. Medicare takes another 1.45% for healthcare for the elderly and disabled. Your state likely takes its own percentage, and some cities and counties do too. Then, there are the deductions you've chosen. Health insurance premiums that have risen 170% in the last 20 years, retirement contributions that might sit in accounts for decades, and perhaps union dues or other workplace programs. All of this happens before you even see your money. Your paycheck is processed by specialized algorithms designed to extract exactly what's owed to each system while leaving you just enough to keep showing up to work. This complex dance happens millions of times each day across the country. What remains, your net income, finally lands in your account. But the journey has only begun. Your brain evolved during times of scarcity, when resources came in unpredictable bursts. Getting a large amount of food or resources triggered dopamine release, a reward system designed to motivate resource acquisition. Your paycheck hijacks this ancient system. The moment your paycheck arrives, your brain experiences a brief dopamine surge, financial pleasure. This feeling peaks about 12 hours after payday, but it fades quickly as your neural reward system recalibrates to your new balance. 3 distinct psychological phases follow. First, the abundance phase, where spending creates little anxiety, bills get paid, maybe a dinner out. Then the conservation phase begins, where discretionary spending triggers mild stress. Finally, the scarcity phase arrives in the days before your next payday. Each purchase now requires careful deliberation as your brain's threat detection system activates. This cycle occurs regardless of income level. Neuroscience shows that millionaires and minimum wage workers experience the same relative stress as their personal resources dwindle. We're all running the same ancient software. Meanwhile, your financial obligations have evolved their own perfectly optimized extraction systems. Subscription services deliberately charge in the early abundance phase when cancellation feels unnecessary. Essential bills cluster strategically, creating the illusion of inevitability. Your paycheck doesn't just represent the hours you clocked. It represents your total life investment in employment. For each 8-hour workday, you likely spend an additional 2 hours commuting, preparing, and decompressing. That's 25% more time uncompensated. The average American spends $3,300 annually on commuting costs alone, effectively a 5 to 10% tax on many workers' incomes. Workloads, Convenience meals, childcare, and decompression purchases further erode your effective hourly rate. Calculate your real earnings by dividing your take-home pay by your total hours devoted to employment, including preparation and recovery time. The number is often shocking. This isn't accidental. Our economic system requires a certain level of financial stress to maintain productivity. Too much security reduces incentive, too little creates instability. The system has evolved to keep most workers in a perpetual state of moderate financial pressure, enough to ensure continued participation without triggering revolt.